Greenwich just completed its 2025 townwide property revaluation. New assessments went out in November. The Board of Estimate and Taxation set the new mill rate in May, and the first tax bill under the new values lands July 1, 2026. If you are buying or selling a home here this summer, you need to understand what actually changed and what it means for your carrying costs in your negotiation. Today, I am breaking down exactly what happened with the revaluation, how the new numbers work, and what buyers and sellers each need to watch for when the July bill arrives. I am Charles Nedder, a realtor here in Greenwich, Connecticut, and I have been walking clients through these numbers since the new assessments were mailed out last fall. By the end of this video, you will understand how the new assessment and the new mill rate work together, why the tax bill on your MLS listing may not tell the whole story, and how to use the right numbers in your buying or selling decision this summer. So let us start with what actually happened. Every 5 years, Greenwich revalues all real property in town. The last revaluation was in 2021, delayed a year because of COVID. This time, the town assessed every property based on its fair market value as of October 1, 2025. Your new assessed value is 70% of that market value. Across town, the average residential assessment went up approximately 27%. That is a significant jump, and when homeowners saw those notices in November, a lot of people assumed their tax bill was about to spike by the same amount. Here is where most people get it wrong. A 27% increase in your assessed value does not mean a 27% increase in your tax bill. It does not work that way because the mill rate adjusts. The town still needs to collect roughly the same amount of revenue to fund the budget. When the total assessed value of the entire grand list goes up, the mill rate comes down to compensate. Last year, the mill rate was 12.041. The new mill rate for the fiscal year starting July 1 is 10.12. That is a meaningful drop, and it gives Greenwich the lowest mill rate in the entire state of Connecticut. So here's the math that matters. Your tax bill is your assessed value multiplied by the mill rate. If your assessment went up by about 27% and the mill rate dropped by about 16%, those two forces partially offset each other. For the average home, the net change is relatively modest, and this is the key point, not every home is average. If your property appreciated more than the town average since the last revaluation, your share of the total tax burden went up even with the lower mill rate. If your property appreciated less than the average, you may actually see a lower bill. The revaluation does not change how much the town collects. It changes how that total gets divided among property owners based on current market values. Now here's what this means if you are buying a home in Greenwich this summer. The tax figure listed on the MLS is based on last year's assessment and last year's mill rate. That number is outdated as of July 1. You need to ask for the new assessed value, apply the 10.12 mill rate, and calculate the actual carrying cost you will pay going forward. On a home with a new assessed value of $1.4 million, your annual property tax is $14,168. If you were looking at the old MLS figure and it showed $12,000 or $13,000, that gap matters when you are calculating your monthly payment and your total cost of ownership. And if you are selling, here's what you should be ready for. Buyers and their agents are going to look at the new tax number, not the old one. If your property's assessment jumps significantly, a buyer may use that higher carrying cost as a negotiation point. The smart move is to know your new number before you list, disclose it proactively, and price your home with the updated tax reality already factored in. Surprises at the negotiation table work against you. So here is the bottom line. The revaluation raised assessments, the mill rate came down, and the net impact depends entirely on how your specific property compared to the town average. The old tax number on the MLS is no longer accurate. Whether you are buying or selling this summer, you need to be working with the new numbers. If you want to know exactly how the new assessment affects the home you are buying or selling, give me a call or text me at 203-524-4303. I will walk you through the numbers for your specific property so you go into your next move with complete clarity. I am Charles Nedder from Greenwich, Connecticut. I will see you in the next one.